So welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today we're talking about automation and innovation in the hemp and cannabis industry. We are here live at the World Trade Center. I'm here with Arnar and Denny. They're with Greenvault Systems. I'm here with Jason of 420 Wholesale Pack, and then there's Andy of Poseidon Asset Management.
It's like a bowl and a bullpen. It needs to come out. So this question about cannabis banking.
The designated hitter.
That's it. Yeah. So I will note that Organogram out of Canada is rolling 40,000 joints a day. And so that is going to be a game changer. When they do that, everyone else is going to either have to white label with them or change what they're doing because they're not going to be able to keep up. You just don't see people in North America making cigars, and that's for a reason. So anyway, let's move on to the cannabis banking. This thing needs to come out. So there's a recent congressional hearing on cannabis banking as Congress has been urged to allow legal cannabis business access to banking and lending services. So, Andy, you've probably already noticed that the Cannabis Trade Federation hired 15 D.C. lobbyists to push for U.S. cannabis law reform. The former House Speaker Boehner got hired by a cannabis lobbyist group, and the World Health Organization recommended cannabis rescheduled as a controlled substance. So how would potential changes to the cannabis banking affect the lending landscape of the industry and therefore the ability to acquire new automation machinery and investment in the cannabis and cannabis businesses?
Let me just reiterate that, safe banking is actually very far along in terms of the regulatory cycle. It has incredible bipartisan support. And so right now we kind of have the Safe Banking Act, we have the States Act. The States Act, I have to admit, I'm somewhat ambivalent about. It would essentially push it would push cannabis down to the states and make it a states issue, and it would ultimately leave a fragmented market, much like what we actually had with the repeal of alcohol prohibition. While by all means great as an investor, it does have implications for the way the market will look down the road. Safe banking, on the other hand, is something that I think absolutely everyone in the space can agree on. As an investor in this space, it is extraordinary the degree to which we've lost bank accounts, been hassled by banks, closed without notice. You name it, it's happened to us. So with the introduction of safe banking, the amount of capital that's going to pour into the space is going to be astronomical. And actually, leveraging the, John Boehner, joining a cannabis advisory board, he actually joined Acreage, and actually just yesterday, Canopy Growth, the largest cannabis company in the world by market cap, actually, purchased, through some financial engineering, purchased an option to buy Acreage for $3.4 billion. And so what we're kind of seeing already is that when we start, as this industry formalizes, scales, and we begin to start talking about very seriously large numbers, the regulatory framework can kind of bend around that. And I think that's what we're starting to see. And I think with the formal passage of the Safe Banking Act, competition for capital is going to be astronomical. Interest rates are going to go from, I typically see, it's probably around 50% now. About a year ago, it was closer to 20% for cannabis businesses. We could see that rate plummet all the way down to, 6, 7, 8%. For example, I have a car loan at like 2%, just by comparison to show how low that really can go. And in conjunction with that, and up to this point, all institutional capital has been sitting on the side. So when we talk about BlackRock, we talk about JP Morgan, Morgan Stanley, all these institutional investors want to enter the space. They simply have mandates that they can't.
BlackRock is
as soon as that's. I'm sorry?
BlackRock got in the game last week.
Oh, no kidding. I'll have to look into that.
I think it's like 100.
They're huge.
Yeah, they're in the game.
No kidding. And again, that's a perfect example of how it's even before the SAFE Act passing, large amounts of money are starting to find ways into the space through creative means. And so I think you're going to get two big things are going to happen. With the increased amount of capital, you're going to get a reduction of rates, and you're going to get a lot of companies getting juiced up with outside capital. But I think while that's generally very good for players in the space, I think it'll actually represent another extinctionary event within the U.S. cannabis framework, in that if you're a well-run operator, you've effectively optimized your operations and automated them. You've invested in capital assets that are durable, and you've got a plan to be a robust business, 5, 10, 20 years out. I think this is great for you. You're going to watch your valuation inflate, and you're going to capture a lot of upside. There is the contrast, though, that as additional capital comes into the space, it's going to exacerbate the disparity between struggling operators and successful operators. And so, candidly, I think it might be an opportunity for, if you're a struggling operator in Washington and you've yet to, really achieve any sort of, EBITDA or net income for that matter, you could see your competition get hundreds of millions of dollars invested into them and functionally crush you by further automating and reinvesting capital assets in their businesses. So it's going to be climactic. I think the M&A is going to be absolutely intense. Again, this canopy purchasing of an option acreage, it's just a taste of that. And we've kind of gotten little bites here and there in the M&A markets. I think Oregon actually right now is really heating up from an M&A perspective, because I think investors are starting to realize that market has finally sort of hit a floor, and sort of the struggling operators have kind of stepped out and allowed the more skilled and operationally efficient operators to scale and take that market share. So yeah, it's going to be wild. It's definitely going to be a pretty climactic, 6-12 months once that passes. And certainly from the investor perspective, it is the time is now to really build that position and capture that updraft.
It's amazing what happens when you use other people's money. When you look at Amazon, you look at Starbucks would just open up a shop right next to one another just to keep the competition out, and then lower prices so that mom and pop shops go out of business, and then they can charge you $7 for a 50-cent cup of coffee. You look at Amazon, and there's business models where they try to acquire a diaper company in the Northeast that the manufacturer of diapers said no. And then so Amazon just lowered the price to the point where they were losing money, but that company went out of business. And then guess what? They'd raised it to normal prices. So I think with access to capital, you're going to see a lot more strategic plays. In Washington, we saw an individual a couple years ago open up an arcade in an area just simply to keep out a retailer, because there's 1,000-foot limit on any children's, businesses. So what some people thought was ruthless in the cannabis industry is really just normal business practice. But we're starting to kind of get woken up to that, I guess, pretty harshly, I guess, in the cannabis industry, where everybody hugs you before they even really know you. So things are changing, that's for sure. And with that, I really appreciate you all being here with me today. So with that, we're going to roll this one up. I'm Josh Kincaid. This is your Cannabis Business Podcast, The Talking Hedge. Like, share, and subscribe, or don't, and I'm out.